If you're thinking Chandler is moving with the rest of Arizona, it is not. Right now, the valley is litting, and Chandler is sitting in a very different position compared to several surrounding cities. Some areas are clearly giving the buyers more leverage, but Chandler hasn't softened as fast as many expected. That creates a dangerous gap. If you are a seller and you price your home still like 2022, 2021, right? You will stay on the market for a long time. And if you are a buyer, assuming every city is negotiable, you may miss the right home. Chandler isn't crashing, but it's not immune neither. The key question is, where exactly is the leverage shifting inside of Chandler? And what does that mean for your price or offer strategy? Let's break it out. So we mentioned 2022. So let's take a look of what happened to home prices since 2022, right? Over the past 3 years, or could we say 4 years, 2026 now, right? Most areas of valley have seen price stay flat or decline, okay? Except one, the Northeast Valley. Okay, surprisingly, it has been up 13% overall and 18% for single family homes. This is a very common product. Single family house is a very common product for Arizona market. Okay, now most of the other regions down from 3% to 13%. We're talking about the largest drop is in Pinal County, and West Phoenix is also has the largest drop as well. If you're talking about like Maricopa County, this shows that the higher end areas, especially in the Northeast Valley, have stayed strong, while the rest of the market has softened. Okay, easier for the buyers to buy in those markets. Now, what does that mean for the seller? If you are in the Northeast Valley, okay, you see that there's the strongest reason right now. Well, at least it's good now, right? The demand is higher price home has, held up. A lot of people, a lot of high-end people, high-end price home buyers still interested in the area. And now, however, though, don't say that you can price any price that you want for those homes, right? Because those are more than that the people who has, you know, the ability to the Northeast Valley. And if you're already familiar with the area, right, we're talking about like North Phoenix kind of thing, a little bit toward the east, Scottsdale area, right? Those are the high-end price home. Okay, so they have a little bit more expectation. So if your home is in a very bad condition, you cannot just price as high as the home that's ready to move in, modern upgrade, right? So you still have to price correctly, even though you are in the area that still have a lot of buyers in today's market. Now, if you are in Pinal County or in the West Phoenix, we're talking about like Buckeye, Goodyear, Avondale, right? Or in the Southeast Valley or North Phoenix, the price are still lower than the 2022 level. The buyer has a lot of negotiation power, and absolutely overpricing is something that you absolutely must avoid to be able to sell your house in today's. What about the buyers? What does that mean for you with this information? If you are buying outside of the Northeast Valley, okay, many homes, first of all, price, if they do correctly, well below the 2022 level. Okay, you may have more rooms to still negotiate even though the price is already low, mainly because there's a lot of inventory in those areas. And to avoid competition, to win the competition, the seller has to be willing to, accept some of the terms that you're giving out, as long as it's still reasonable, by the way. I mean, because some of the investors offering like 70% or 75% less than the market value, those are the things that as a first-time home buyer, as a reasonable investor, you shouldn't do that. Okay. Now, you may have this can create opportunity, especially in Pinal County and the West Phoenix, right? Where those drop in price is more extensive, is more than the rest of the area. If you are buying in the Northeast Valley, by the way, prices still strong. Okay, so you don't expect that a $5 million house is going to drop to $4 to $3 million house easily. Okay, you do have to have an offer strategy, and you have to prepare with competition as well. So if you find a home that is, check every single of your box or checked with the majority of your box, that may be a sign for you to get started right away and put in a reasonable offer instead of trying to lowball or trying to get the discounts because you heard that most of the area in Arizona has dropped in price, right? That is actually not a winning situation for you. Okay. All right. So next, we're going to talk about how are we able to look at the market. How do we know what's happening in today's market? And and we can do that by looking at what we call the comfort market index result. Okay, specifically for today market, we have 16 buyers that actually in favor of the buyers. Okay, meaning that the comfort market index moving a little bit lower. Okay, lower. This is very easy to compare. I mean, if the number is about 110 or more, right, that is a seller's market. From 90 to 110 point is a balanced market, and if it is less than 90 point, it is the buyer's market. And in today's episode, we surprisingly have 16 cities that has the score, the index value less compared to the previous months. Okay, we're talking about the only two cities that moving favorable to the seller is actually Glendale and Avondale. Now the change is not that much. In fact, Glendale actually doesn't change much, only 1.1 point, one point. Okay, so almost 0% change. Avondale is 3%. So you can see that this is a big difference compared to the previous week. Okay, first of all, the previous week there's only 13 cities that moving toward the buyers. Okay, that means 5 cities moving toward the seller or balance. Okay, right now we have 16 over 2, and on average it's a 6% drop compared to also the 3.6% drop of last week. This tells us actually the shift for the entire market is now toward the buyer. Okay, toward the buyer. And the biggest mover, if you look in here, okay, Fountain Hills. Okay, the big drop, 23% drop. Goodyear, 17% drop. Scottsdale, 11% drop. And Chandler, 4% drop. To be honest, the reason why Chandler is here is that it has been positive for many months. Okay, now it's on positive, -4. But in fact, there's some cities like Buckeye, 9% drop, Maricopa, 7% drop, Queen Creek, 8% drop, right? So those are the cities that actually damage more for the sellers. Okay, so overall we have still 9 cities that in the sellers market: Chandler, Fountain Hills, Gilbert, Phoenix, Cave Creek, Scottsdale, Mesa, Glendale, and Tempe. For those of you who haven't watched my show for a little bit longer, you're probably asking why you say 16 cities moving favorable to the buyers, but there's only 9 sellers market. Those are the cities that has an index still greater than 110. Okay, even though it's dropped, but it's still greater than 110, so we still consider those as a seller's market. 3 in the balanced market, we're talking about Avondale, Paradise Valley, Avondale, and Peoria. The rest is in the buyer's market. Okay, so the direction matters more. Okay, and so here's something that you should pay attention to. Historically, we see that by mid-February, we expect strong enough demand to slow or reverse the inventory, meaning less and less home available on the market. Okay, after the Super Bowl, active listing typically peak and begin to decline in the healthy spring season, typical historical season. Okay, That's not happening this week. Okay, in 2025, inventory didn't actually peak until late April. That is a sign, that is the weak signal for the demand. Okay, 2026 this year, because of those data right here, is actually gonna be very similar to 2025. Okay, even though the mortgage rate has dropped compared to 2025, the demand is not there yet to consume all the listings that are available on the market right now. So obviously, lower rates should actually improve affordability and demand, but it's actually not. So maybe as you see in the previous videos that I have, okay, the buyer has more things to worry about. We're talking about economy. We're talking about the job situation. We're talking about the political overall political, right? Political, not sure, but you get what I mean, right? So there's a lot of things that the buyers are also concerned about in addition to the market rate, and some of them may be still waiting for the home to, home price to drop furthermore, and they also waiting for the market rate to drop furthermore, and that's exactly the reason why right now the demand hasn't been up yet. Okay, it's still very similar to the level of 2025. Now we mentioned a little bit about affordability. So let's take a look at affordability index in the national level. Okay, what this in front of you right here is the affordability from affordability index from the beginning of 2025 to all the way to the end of 2025. So a reading 100 point right here means that a family on the median income has just enough income to qualify for a mortgage on the median price home. Okay, and the higher the number is, the more affordable the housing is. Okay, now I think that is more easy. So compared to 100, the higher away from 100 point, the more affordable a housing market in that area. Okay, at the start of 2025, and the reason why I showed you this is we don't have the data for 2026 yet. Okay, so this is the most recent right here. Okay, at the start of 2025, affordability is just above the 100 point level, around 102. Okay, it climbed up a little bit to 104 in March and dropped down again in April. Okay, that's a start. It dropped out until June. Okay, and it start going back up to the second half of the year. Okay, yeah, as you see here, May is normally the time that well, not normally, sorry, in 2025 that dropped 100, and in June is the lowest, 95.5. This means that the typical family is no longer had enough income to comfortably qualify for the median home price in that area in the United States in this situation. Okay, but then something changed last year. Okay, obviously the July go up, August go up, September go up, October go up, November go up, December go up. So what is that something change? So what is that something change? Okay, it's the interest rate. Okay, it changed a little bit. So when the interest rate drop, right? Remember, I don't know if you recall in previous video we talked about that interest rate within 2025 dropped toward the end of the year, right? And that's the reason why affordability, more homes available to buy a house in that area, and therefore the affordability go up toward the end of 2025. And of course, the other reason why the home price also go up, because I also mentioned that mortgage rate is not the only factor, right? But the second reason is that the stability of the home prices throughout 2025. Even small rate decline can significantly impact the monthly mortgage, okay, and affordability measure payments over the year. But always the other thing that you can say is home price, because this doesn't jump up and down. So the buyers expect, the expectation doesn't change throughout the year, right? So for example, if the beginning of the year home price is this, and maybe toward March is like this, and then go up again and go up down again, so, all right? So it's very difficult for the home buyers to predict. but it's not the case in 2025. Okay, 2025 home price pretty much the same from the beginning to the end. The only thing, so that give the buyers more confidence to make the decision in that market. And with the addition of the lower interest rate, more family is able to afford are able to afford a homes in that area. Okay, for the buyers, this means the second half of 2025 offer better qualification power than a spring market in 2025. For the seller, it explains why activity may have picked up later in the year 2025 despite earlier weakness. Okay, so with this chart, okay, and because 2026 doesn't have a lot of data yet, we can say a little bit prediction right now is February, right? More affordable home in March. It's gonna drop down. Yes, first of all, the seller be careful because less and less family will be able to afford to buy the house. So you will have the problem with selling the house around April, May, June, and July. Then it's gonna go back up. Okay, so that's come the question. A lot of people, a lot of homeowners ask me, Long, what is the best time to sell the house right now? Right? Is that going to be better for me to wait until August or to September to sell when the affordability go back up in 2026? The answer is that, and I know that you won't like this, but I have to say it. It depends. Okay, it depends on the condition as well, because like I said, affordability right here, this chart right here only show based on the quality. We're talking about two reasons, right? The mortgage and the home price. And since we are not sure how home price is going to go up and down toward the end of 26 yet, it may or may not be the same situation like 2025, right? So I normally advise a seller is that instead of looking for the future, what I normally do is looking at the condition of the home as of today and tell you exactly how quickly, how fast you can sell the house in today's market, in today, okay, so that you can tell me whether it is a good time for you to sell, because you are the only person who can know whether it is a good fit for you and your family or not to sell right now, right? So that's the reason why I want to show this chart and tell you this. Perhaps this is better, even though the market show, in general like this. Okay, Kat, I think we should talk, maybe cut a little bit at the end. So after I talk about, normally I show the blah, 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 the buyers, whether it's good to sell in today market. I think that's good to move to the next and cut the rest, okay? Now here's the next, okay? Next part right here. But that is it for today, everyone. Thank you so much for watching the episode. If you're interested in receiving a weekly market update delivered to your inbox, to your email, feel free to scan this QR code right here and enter your email information. My name is Long Lei. Thank you so much for watching. Bye-bye.